Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Wednesday, March the 31st. The year's 2021. Let's talk trading. It's time for the monthly wrap-up. And this monthly wrap-up video is for educational purposes only. Your results may differ from mine. So we've come to the end of the month. I hope traders out there had a profitable month. I hope you've enjoyed the videos that I put out there, and especially the ones that Walmall joined me on. I hope you guys are finding value in them. And just so you know, we haven't really been beating on it, but you have to have your risk management in place. In fact, one trader asked something about if I could post these, and I'm wondering, do you want me to post the templates here? Because it's just the TRO my notes with the different text in it. So that's your risk management. The same thing's true here on the brain management. Trade without fear and trade without regret. You don't fear the future and don't regret the past, okay? Because that's just going to give you pain, and it's not the market doing it. It's you doing it to yourself. It's your reaction to what's happened. That's where your pain comes from. That's true in trading, and most of the time that's true in life too. Money management, and once again, this is just the my notes indicator with this verbiage. But if you want, I could post the templates out there if that's really what you were asking for. You have to learn to take the profit before the market takes it back. I mean, today there was some really good trades on the pound, but if you didn't take your 5 or 10 pips, the market just came right back and took it right back from you, maybe even stopped you out. So, you have to have a money management strategy. You can take it all. You can take 50%. You can, move your break even up, ratchet it up, but you just have to always remember, never forget that. When you win, it's luck because you did not control the outcome. Sure, there might have been skill in your research and everything, but on any particular trade, it could go against you, it could go for you, so it's luck. Okay, since we're talking about the monthly end, we can see here, it looks like we're going to end the month below the monthly open. And so we're going to have a nice red candle there. But for the week, so far, all the gaps have filled. Once again, here is the opening range for the year. Here's the opening range for the month. And you can see we're 120 pips below the monthly open at this point in time. We're back inside the range for the week, but it's only Wednesday. Anything can happen, right? We still have the rest of the day and Thursday and Friday to put the trades on, and Friday being NFP, non-farm payroll. 164 pips above the yearly open at this point in time. You can see, but we've had a red month. The month of March is red. Now, this is kind of interesting because remember, I updated the dollar time indicator here, dollar TRO time, and it will allow you to tell you what each hour is, and then it tells you about what's going to happen each month. So if you don't have the latest and greatest version, you need to go download it. But it says the pound forms a bottom in early to late March. So basically, what that tells me is it's going to form a bottom sometime in March and then move higher into the end of April. So if we take a look here at the month, it did form a bottom right here. Okay. But, here's the yearly low, but it did form a bottom. And if you're one of those trend line kind of guys, you can see here, if you snap the trend line, you can see it's staying above that trend line. So you just have to wait and see what happens next. But according to this, it's going to move higher into the end of April. So who knows? Maybe it'll make a yearly high next month. I don't know. Nobody knows. We just have to wait and see what happens. And we are in that inside bar, the daily inside bar that happened 17 days ago. We got above the weekly inside bar that happened 2 weeks ago, but then we popped out. We're 6 pips below that low, but 8 pips below that daily inside bar high. And on the inside bars, there's still some to trade here, as you can see, highlighted in gray or blue. On the daily, we're at 95 pips on the pound, only 2 pairs over 100. So once again, kind of depressed or compacted, compressed days, depressed, compressed. Just don't seem to be getting the range that we're normally accustomed to seeing on the pound. But we are 19 pips above the previous day's high. A nice little breakout there. But let me just switch back here to the monthly chart. As you can see, we're most likely going to have an inside bar here. So the high and low of March are going to be places to look for breakouts. Very interesting day today. We've gone across the weekly open 1, 2, 3 times. You can see we're in these upper wick zones of these 2 candles here. And in the other video, the last hour, I snapped the cursor right there at the 3808. You see it went above but didn't close above. It came back down. So there was a nice little trade there. We did take out the pivot. The pivot was right near the open. We took out a missed pivot. And the rats had a chance to feast a couple of times here. And you can see here, once again, a lot of movement. We came out of that rat zone. We're back into it. And looks like we have to look for reasons to short here. But then again, it could go on to make new highs. We don't know. Just play the statistics. Chances are this number is going to be 20 or more by the end of the day. Once again, we took out that pivot for the day. Here on the week. And oh, this is the wrong chart for that. Saying, what's going on here? Here we go. We took out yesterday's pivot that was missed. So we've taken out a couple of missed pivots. Now what's really interesting, you see this missed pivot level and this missed pivot level? They're pretty much the same level. And we took them both out. So looks like we're going to have 1 missed pivot for the month of March, and we've got 2 that have still been missed February that need to be taken out. Wick zone, in and out, in and out, in, out, back in and out. So once again, a lot of price action last day of the month. I guess people are clearing their books one way or the other. Now where it gets interesting here, this is where you get to do your analysis. If we switch this over to the monthly time frame, you can see here, high minus low, we had a range at 347, only at the 13th percentile. That means out of the last 100 months, only 13 were below 347 pips. So this is price compression. It's going to probably need to expand. And you can see that 2 months ago, we were at 307 or at the 8th percentile. And you see what happened here. It shot out like a rocket. So once again, starting tomorrow, April 1st, this ain't an April Fool joke. Remember to look for these breakouts of the monthly high and low. Now, once again, inside bar. We didn't break out at a previous high. We didn't break out at a previous low. But 1 month ago, 480 pips out of that previous monthly high. So, once again, study the ranges, look at the price action on the chart, and, place your trades, put your stop losses in place. And if you're the type of person that wants to swing trade it and ride it, you might be in for a nice long ride. And then, if you're trading away from the high, looking for reversals, you can see we have 215 pips off of the monthly high and 132 pips off the monthly low. So what that tells you is, when you look at the weekly and monthly rat zones, 20 pips off of the daily, off of the monthly and weekly high and low, when it comes out of that zone, once again, you can put your trade on, set your stop loss accordingly. Hopefully price moves in your favor. You can then ratchet your stop loss up so you can secure some profit if price comes back against you. Give it some room to breathe, or you'd be happy to take the pips and you can always re-enter. So it just depends if you want to watch it, do the up and down motion from, hour to hour or minute to minute or tick to tick. If you like watching that, you can see here, it went up, it almost came down, then it went up, then it came back down. So if you don't mind that happening, maybe you put the trade on yesterday and then you're not going to look at it until the same time today. You're going to let 24 hours go by and see if you got stopped out or see how much profit you have, and maybe you readjust your stop. I mean, this really isn't difficult. And what's really interesting though is how I put the order blocks in the last donational files, and we really haven't talked much about order blocks. So I think maybe next month we'll broach that subject. And I know you guys are waiting for the imbalance indicator. I'm still putting some finishing touches on it just to make it the best I can. So hopefully I get it right out of the box the first time. But it looks like it's going to be something that can prove to be a good tool to help you become profitable. Because see, like right here, some people might call this an order block. Technically, I wouldn't, because the high or the close isn't above the high. But the potential order block would have defined this as an order block. And you can see right here that price dipped down in here. So if you would have, bought in somewhere around this level, you see what happened next. And somebody could say that's hindsight, but the same thing would be true here. You can see here, this would have been an order block because the close was below this low. So it would have painted that. You can see how price came back into that order block and then dropped. And it's just, little things to look for when you're trading. And because I've been working with it so much, I don't even need the indicator anymore. I can just look at the chart and boom, boom, I can just see them. And just like the imbalances, I can just see them. And that's really what you want to get to, that level where you don't need the indicators. These things. It's almost like having a calculator. Once you know the math, the calculator just allows you to do it quicker. But if you don't understand the calculus or the trig or whatever you're doing, the functions, the geometry, if you don't understand it, the calculator is really not going to help you. And the same things with the indicators on trading. Think of them as calculators. They're just doing things, faster than what you can do in your brain, and plot these lines and everything. Let the computer do the work, right? So anyway, that's the monthly wrap up. Once again, traders, I hope you had a profitable month. I hope maybe Walmart and I helped you along the way. But just remember, when you sit down at your trading platform, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.